I wonder how you reflect on risk appetite as we see it at the moment. We've seen over the last few days global markets perhaps drifting a little bit higher on expectations that maybe the April 2nd tariffs from the US are not as tough as maybe had been feared. Then we see President Trump dialing back on that a little bit. How do you assess prospects as we wait for April 2nd?
Yeah, good morning, Anna. Well, we're hanging in there at the moment. It looks like in global equities with a little bit of positivity still seeping into the markets, both in Asia and in Europe today. And I think, you know, the most recent comments that we've got from Trump kind of push you a little bit in both direction, right? On the one hand, he's saying that he doesn't want to see too many exceptions to the tariffs that he's planning to introduce. It would become very messy that way. On the other hand, he's sort of also talking about the idea that there may be some leniency, that he might not go the whole hog. Partly that's probably because it's so difficult to do it and to be able to implement all that, and you don't want to risk aggravating everybody and causing a big sort of tit-for-tat responses as well. One way or the other, though, the market at least feels that whatever we get next week, it's going to be tolerable. So I think that you have that on the equity side. The other thing, of course, to pay attention to is in the metal space. We've got that really big divergence between US copper prices and the London prices because our reporters have learned that the copper tariffs will most likely be introduced a lot sooner than had previously been thought. So that's creating that scramble to get as much of the material over to the US as quickly as possible.
Well, Paul, you talk a little bit about this tariff impact, and of course the market's for sure bracing for it, but you also talk about how they're front-running that impact from a financial market basis. We saw the consumer confidence numbers in the last 24 hours reflect a lot of that same mentality. Walk us through how much of this might just be not just priced into the financial markets, but priced into the consumer thinking and affecting things like inflation expectations.
Yeah, interesting, isn't it? So pretty downbeat outlook from the consumer in the US. You know, worried about the impact that there's going to be on inflation, just worried about that investing climate and that job sort of outlook as well. You know, there's a cloud hanging over everybody at the moment. You hear it from the likes of the Fed's Goolsbee, who was saying overnight, you know, there's a lot of dust in the air. It's that uncertainty factor that's making everybody cautious right now. And so people would really rather there was a resolution one way or the other. And so that's kind of feeding into, you know, the Fed expectations, people sort of dialing back again on the idea that the Fed will cut. Just, you know, kind of like it's going to be steady as she goes as far as that monetary policy support could be, too. Lots of uncertainty, Kriti.
Yeah, a lot of uncertainty there. What about when it comes to the China market, Paul? A couple of banks turning more positive on the China front.
That's right. So the China story continues to roll. We had Morgan Stanley upgrading its forecast again, seeing very positive outlook from Chinese earnings, which are kind of finally bottoming out as in their view. Goldman on the other side is saying China is back, at least on investors' radar. It's not seeing massive flows into China yet, but it is seeing that people are getting more interested in it. And so you have those two factors in there. At the same time, we have the tariffs hanging over people. So we're just waiting for that to clear, and then perhaps it surges back some more.